This is Nick Radge, Manager for the Australian Shares Direct Satellite Portfolio, and today we're going to be talking about the June results of the portfolio and also a little bit about the Australian market. So for June 2024, end of the financial year, the portfolio finished up 1.74% and the benchmark closed down 1.40%. The Australian market is struggling a little bit. The US market did move to new highs during June, but the Australian market did falter. The small caps risk declining back into their multi-year range, which we'll take a look at the moment. And the main driver for the Australian equity market struggling at the moment is because of the 50% chance of a rate rise that's been discussed by the Reserve Bank this month. So as a result of the Australian market taking a step back, the strategy will take defensive action into July, which means we will go to a 100% cash position. Now, the strategy going into a cash position, being defensive, is attempting to sidestep any sustained and long-term downtrends, such as what we saw during the GFC. It is a natural part of the strategy. It has been fully tested, and it does increase our risk-adjusted return over the longer term. And it's also a core reason why the strategy offers good diversification against other products and a low correlation or a lower correlation to the broader market. So when looking at the small caps here in the Australian market, this is a weekly chart. You can see how the market is starting to step back in. We had this period of sideways trading for a couple of years, and I would have liked to have seen this Australian market kick on higher and head back up towards these old-time highs aligned with the US market. But that's just not occurring at the moment, mainly because the market is now waiting to see what the Reserve Bank does. So with regard to this sideways trading, this is the Achilles heel of our strategy. It is a natural part of the market over the very long term, but it is the part of the market where our greatest losses will actually come from, and is why our performance has been subpar over the last year or two. During extended upward trends, such as we saw after 2020, the strategy gets fully involved and does do very well in extended downward movements, such as what we saw here late 2021. The portfolio will go to cash, and we will take a defensive stance and tend to beat the market in that kind of environment. But unfortunately, when the market goes sideways like this, we get churned, we get in, we get out, we get in, we get out. And unfortunately, those little losses do add up over time. There is no way to predict how long this will last. As I said, I was hoping that that breakout would take us back to all-time highs, but it doesn't look like that's going to happen until the Reserve Bank takes its action or non-action. So that's it for June and the end of the financial year. As usual, if you have any questions, please feel free to drop me an email, nick@thechartist.com.au. Thank you.